Well, I sold dollarcollapse.com a little while ago, and I've spent the last 6 months or so in the transition, training new people and getting the new system spun up and everything, and it's running really well. Good people are in charge. It's going to be as good as it always was, and then much better as these really competent people put their stamp on it, which leaves me with some time on my hands. So as we were talking about before we went live here, this is completely new for me. I've barely even had vacations over the past 30 or 40 years. I've just worked continuously. So all of a sudden I've got time on my hands, and so far so good. I think I like it.
No, fantastic. And I think that's what maybe a lot of Americans are looking for right now. We'll see how we can maybe, with financial insights that we share in this channel, help them achieve that, for their future. But what I wanted to discuss today was really the economy and where we're headed. It seems like as we talk about on this channel, it's good to be aware and prepared about what is coming ahead. And it seems like a lot of Americans right now are very pessimistic about the economy. Gallup just came out and said that the economic confidence index, people are less confident about the economy now than they have been really since the 2008 crisis. So your take on that and what's causing that?
Well, it's just been an onslaught of stuff for the average person. I mean, things weren't great in 2019, and then in 2020, the pandemic hits, and I don't think people who work online really get how horrendous that 2 year stretch was for most other people. If you're a school teacher or checkout person at Costco or a cop, where you have to deal with people day to day, the last 2 years were a nightmare because you either your job was shut down completely, or you had to wear a mask, and they were forcing you to get vaccinated even if you didn't really want to do it, and it was a really hard time. And the government sent out a couple of stimmy checks, but that was it. A lot of people lost their livelihoods, and a lot of other people suffered in various ways. And so we come out of that, and then boom, inflation just spikes where, okay, maybe you're getting a little bit of a raise finally at your job, but inflation is eating that up and more, so that life is getting harder. Stagflation, where the economy doesn't grow very quickly and prices go up dramatically. That's basically the hardest environment for most people to live in. And we're there now. We've got, if you calculate it correctly, we've got double digit inflation. 12 to 15% in most sectors. And we've got wage growth of maybe 5% for most people. So they're getting smacked right now. So it's not a surprise. Oh, and you've got politicians that seem completely incoherent for various reasons, whether it's medical or just low IQ. The people in charge don't sound like they've got a handle on things. So you put all that together, and it's no surprise that people are very pessimistic about the not too distant future, even leaving aside geopolitics, which is another thing. Yeah, so that doesn't surprise me at all. And it's very tricky no matter how you slice it, because people who are nervous about the economy tend not to be risk-on investors. So that means it's bad for the stock market, which we're seeing. Stocks are extremely volatile right now. And it's bad for the general economy because consumers who are very nervous about the future don't want to buy a lot of new stuff. They're not buying new cars or taking nice vacations on the scale that they might have otherwise, given the amount of money that they have. So and then we have midterm elections coming up. So we're going to see very possibly a power shift from one party to the other, which might just paralyze the government. If you've got the executive branch in the hands of one party and the legislative branch in the hands of another party, nothing gets done. And I think people sense that too. So anyhow, no surprise that people are nervous, and the effects of that are going to be felt for quite a while.
And it does seem like, as you mentioned, from the policymakers, and if we do look at the Fed, you mentioned a lot of incoherence coming out of the powers that be. So did you want to expand on that? Because it seems like what the Fed has been doing, we're seeing rate hikes, but going forward, it seems like there's a lot of disagreement at the Fed of what they're going to do to reduce this inflation that we're seing?
Well, yeah, as your viewers know, of course, the Fed has been making horrendous mistakes ever since the 1990s, and that's been leading to booms and busts of increasing amplitude. And it's putting the Fed in a box where there's really nothing it can do to get out of the dilemma that it has created for itself. And you're kind of seeing that in the communications of the Fed right now, because half the Fed talking heads are saying, oh, we'll raise interest rates a little bit more, but we're going to probably stop by September. And so don't worry, it's not going to cause a hard landing. Things are going to be okay. And you got the other half of the Fed talking heads saying, yeah, we're going to raise interest rates way past neutral because we got to deal with this inflation, which is a part of the reason why stocks are so volatile right now, because they're keying off the Fed, but they don't know what to make of what the Fed is saying. And the reason why the Fed is incoherent is because there's no fix anymore. They have hit a point where whatever they do is a catastrophe. If they address inflation by raising interest rates dramatically, that crashes the entire leveraged speculating community, which means, hedge funds, big banks, people who bought too much house with too big of a mortgage. It goes on and on. Those people will be hurt badly by rising interest rates, and that will crash a lot of the financial markets and stocks and bonds maybe at the same time, which means a 60-40 portfolio just crushes you, which means a lot of people who think they are going to retire can't retire. Anyhow, all of that stuff is happening. And part of the reason that it's happening right now is that the Fed has reached the end of its ability to manipulate markets and fool us into thinking things are okay when they're really not. So the next stage of this, psychologically speaking, is the realization on the part of a critical mass of people that there is no fix. There's no daddy coming home to take care of stuff. There's no adult supervision. There are no super genius financial guys out there that are going to make the markets work again and get our jobs back, et cetera, et cetera. None of that can happen because we've borrowed too much money. We've leveraged the system so egregiously that there's only raging inflation leading to a gigantic crash or an immediate gigantic crash in our future. There's just those two things. And it could be that we don't even consciously choose one or the other, that the market just imposes one and we can't get out of the way of it.
No, it does seem like when it comes to what we're seeing at the Fed is we are seeing rising rates, and we are, as you mentioned, it seems like as we see the Fed trying to rein in inflation, we see the stock market possibly starting to crash. We are seeing a bounce in the last week or so. Your take on that? Do you think this is just a dead cat bounce and we have further to fall?
Well, what we've seen in the stock market lately is a repeat of the pattern that's held for a couple of decades now, where things get out of hand, a bubble blows up and the Fed starts to raise interest rates to kind of rein it in, and then the financial markets collapse. And then the Fed takes it all back and goes back to easing again. And we've seen that over and over. So what we've seen in the last 6 or so months, by the way, this was apparently the worst start to a year in the last 99 years for the broad U.S. stock market. So it was a pretty brutal stretch, which is what you expect when the Fed is raising interest rates. So the question is, what happens next? Is this just another one of those times when the Fed scares the financial markets, then which in turn scare the Fed, and the Fed takes it all back, and we're back in easing mode within a few months with negative interest rates and massive QE? Or has raging inflation thrown a monkey wrench into the Fed's usual plan, and will it prevent them from being able to ease in the face of a crashing stock market? Right now, the stock market is responding positively to the stuff the Fed said about maybe stopping raising interest rates in September. But if it turns out that inflation isn't going away and rising stock prices are seen as a reason for the Fed to keep tightening further, then the stocks will tank again. So I don't really see any way out of this. And my take is that it's different because of inflation, because all of a sudden, we're not in a 1 or 2% official inflation environment where the Fed can cut interest rates as much as it wants to without sparking even higher prices. We're in a double-digit increase inflation environment right now. And if the Fed were to stop tightening and go back to easing in, say, September, that risks sparking an even higher inflation rate as people who are seeing their daily purchases go up dramatically start panic buying. In other words, if somebody's buying stuff once a month and noticing that it's going up and concludes that it's going to continue to go up, maybe they buy a year's worth right away. And enough people doing that push prices up even further, which causes more panic buying. You get a kind of runaway inflation that the Fed is not going to be able to stop without dramatically higher interest rates, which will totally crash the financial system. And that's the kind of thing that could easily happen right now if they don't tighten sufficiently to bring inflation back down to the point where they can ease without fear of sparking new inflation. And if that sounds like a complicated sentence, it is kind of a complicated situation. And the guys at the Fed are nowhere near smart enough to navigate that, if it's even navigable. It's possible that it can't be done. In fact, I think it can't be done. But it would take people a lot brighter than the let me just say it, the morons who are running our financial system right now. So it's more than likely they screw up in some fundamental way in one direction or another. And over the next couple of years, what seems bad today turns out to be the good old days, and things get much, much worse.
And it seems like people are very concerned about that, of things getting much, much worse. As I mentioned at the beginning, that Gallup study that came out. And also in that Gallup study, and I'll link it in the description of this video, it also mentioned how people are more concerned about inflation than really they have been since the 1980s. It's 18% of people, Americans nowadays, mentioning that as the biggest problem in the U.S. right now. Your perspective on that, how it seems like we are seeing an awakening of people really seeing inflation as an issue, and also just the economic conditions here in the U.S.
Yeah, and wait till food price shortages really get going next year, because what we've got now and we have in prospect are much higher energy prices. For instance, gasoline prices in the U.S. are at record levels. Just as the summer driving season starts, normally there's upward pressure on gas prices in June, July, and August, and we're already at record prices. So gas is going to be an extremely big problem for a lot of people in the not too distant future. And then meanwhile, this food thing is terrifying, because food prices and food availability operate with a lag. In other words, what we plant and grow this year determines market conditions next year in food. And the Russia-Ukraine war is taking a lot of agricultural products off the market, and some bad weather, which just kind of came out of nowhere. In the rain, when it rains, it pours kind of way. That's messing with a lot of plantings and harvests around the world right now. And the weirdest part of this is these, 21 or 22 now? Accidents and other kinds of disasters that have happened at food processing plants around the U.S. Just, I think yesterday it was headline news that one of the major egg producing plants in the U.S. Was torched during the night. It was arson. Somebody set fire to it. So you put all that together, and food prices and food shortages are going to be a big issue next year, along with higher energy prices. People are right to be nervous, and you can kind of trace out the reasons why they should be nervous over the next year, and they're very serious reasons. It looks like we're trending towards market disruptions in some really fundamental ways. That are going to touch the lives of average people in ways that the inflation we've had lately. I mean, we've been in an inflationary environment for a couple of decades now, but it's been in financial assets. In other words, stocks, bonds, and real estate have been soaring, which is inflation, but nobody really sees it that way because it feels like a good thing. And it's great for the guys running monetary policy because their rich patrons get even richer when stocks, bonds, and real estate go up. Well, let eggs and milk and bread and gasoline go up, and it's a whole different story. And I think that's the world that we're looking at over the next year at least, and maybe further on.
It does seem like it really puts the average person in a difficult situation because their assets are collapsing in value if they stay in the stock market, if they stay in real estate, if they stay in bonds. And at the same time, we're seeing this inflation. So it seems like prices are rising, but all their assets are falling. So how does someone really cope and prepare for what is ahead?
There are lots of ways to lower your exposure to the things that are probably going to be disrupted in the next couple of years. One is, if you're driving a big giant gas guzzler, you can trade down to something that doesn't use as much gas and maybe still get by. That's not the case for everybody, but it's one option as a way of saving on gasoline going forward. You can start a garden, be somewhat food self-sufficient over the next few years. And I think, once you get used to it, you'll like it. It's a nice lifestyle to grow things. Just being involved with living things is very calming and psychologically beneficial, besides the fact that it feeds you. So do that. And then financially, we have to step away from this for a second and look at the reasons why all of this is happening. And that is because we, in 1971, took the dollar off the last vestiges of the gold standard. And since then, we've been borrowing way too much money and creating way too much currency to cover our overborrowing. And it's left us with this mountain of debt that has to be paid off somehow. And we can't do it. If we try to pay this debt off, the system will just collapse. So we are affected by that as individuals because the only solution, and it's not a good solution, but it's the only one the governments of the world have left, is a mass devaluation, some kind of monetary reset, where they make the real cost of their debt less onerous by lowering the value of their currencies, so they can pay off their debts in less valuable currency. That's terrible if you have a giant bank account or a big bond fund or something, and that's what you're depending on for your retirement. But if you own real things that will tend to go up in value when a currency is devalued, then you're I don't want to say bulletproof, but you're protected to an extent financially. So that means own gold, own silver, own a well-chosen rental house, own farmland. Maybe own the stocks of really high quality gold and silver miners. Those are the things that are going to do pretty well in a monetary reset-y kind of world, where we start to lose faith in our currencies, the value of them starts to fall at an accelerating rate, and governments conclude that a big monetary reset where they go back to some kind of a gold or commodity standard is the least bad option that they've got on their plate right now. And they just do it, and that disadvantages people with dollars because it means all of a sudden the price of everything goes up even further. But it's great for people who own precious metals and other kinds of real assets because it makes their value go way up. So you're protected against the decline in the value of your currency by the increase in the value of your real asset investments. So it's time, if you haven't already, to start shifting your portfolio in the same direction as you're shifting your food acquisition strategy and everything. Just try to get away from the effects of a declining currency, because that's the only solution for our governments right now, is to force the decline in the value of their currencies to get out from under their debts. So we know that's going to happen, barring a nuclear war or something. So just prepare for that and you'll mostly be okay.
Now, a lot of people do see real estate and their house maybe as a hard asset, but I know that you are pessimistic when it comes to the real estate market going forward in the next couple of years. Can you share with our viewers about that? And what is your perspective on investing in real estate anytime soon?
Real estate is a leveraged asset in general. In other words, people have to borrow a lot of money to buy it, whether you're a homeowner with your 30-year mortgage or your ARM or whatever, or you're an apartment complex owner where you borrowed a lot of money in order to buy it or build it or whatever. You've got debts you've got to repay from the cash flow from that real estate. And That's not easy to do in a crash environment. In other words, in 2008, 2009, it was really hard to make money off of real estate because cash flows were going down, and to an extent, costs were going up in some cases. And so it was not a good investment. It was not an inflation hedge in any meaningful way. And probably the same thing is coming soon. So when I say real estate, I'm talking about a very narrow range of things, not your house that you buy with the biggest possible mortgage, but a piece of residential real estate, or I'm sorry, rental real estate, where you're in a place that's fairly stable, you're getting pretty good cash flow from it. And over time, as we devalue the currency, the value of that cash flow that you generate from your rental house will go up. Or a piece of farmland that can always produce food, which will continue to go up in value as the dollar falls. So just buying random real estate is not a good idea in this kind of environment. You know, mortgaging yourself to a hilt to buy a couple of Miami condos, no, don't do that. But a Midwestern college town rental house or something like that, something with the same characteristics of that, might be a good way to diversify yourself in the direction of real things that governments can't make more of. So it's it's a lot more complicated to build a rental house portfolio than it is to go out and buy a bunch of silver coins. But it is a thing for people who have some expertise and some energy and some ready cash. It's the kind of thing you can do, and it maybe positions you well for the kind of environment that might be coming.
And one of the difficulties ahead that we haven't mentioned yet that will probably impact inflation as well is the de-dollarization we're seeing around the world. Did you want to give our viewers an update on that? I know really since the whole Ukraine-Russia war, there's been more movements away from the dollar. So your perspective on how that will impact things going forward.
Yeah. Okay. The short version of this story is that the guys who set up the global financial system are, like I said, morons, because they created these extremely long, complex supply chains that go all the way around the world, and they set up a dollar-based system, which gave the guys running the dollar-based system tremendous power. But then they started using access to the supply chains and access to the dollar-based payment system as a weapon in order to punish their enemies, without realizing that their enemies are within these complex supply chains that they've set up. And you pull them out and the supply chains can collapse. So we're kind of seeing that now, where all of a sudden, there's not enough microchips. Why aren't there enough microchips? Because we're behaving like idiots out there in the world. And the countries that we're punishing by threatening to yank them out of one supply chain or another, or cut them out of the SWIFT bank settlement system, they're looking for ways to avoid the whole issue now by trading in their own currencies, by holding fewer dollars in their bank or their central bank reserves. And that's creating this trend, which you call de-dollarization, which is a very real thing now. You know, China and India and Russia are starting to trade among themselves in their own currencies now. Lots of different central banks are holding fewer and fewer dollar-denominated assets and more gold and other major currencies. So this is a really bad thing for the dollar because there's already too many dollars out there in the world for a world that doesn't need that many dollars. In other words, if everybody who loaded up on dollars because they need dollars to buy, for instance, oil, suddenly realizes they can buy dollars with rubles or yuan or their own national currencies, and they decide to dump their dollars in order to buy those other currencies, then there's a huge surplus of dollars out there, which means the value of the dollar one way or another has to fall. And in a general sense, the way that'll happen is that the holders of those dollars overseas will come back to the U.S. and say, okay, I want to buy U.S. assets with these dollars. And they'll make the price of a lot of U.S. assets go through the roof, which is the same thing as saying they'll force the value of the dollar down. So that could be an inflationary tsunami at some point in the not too distant future if countries that are legitimately mad at us continue to act on that anger by using and keeping fewer and fewer dollars. This is a very big deal, and it's not something that seems to be on the radar screen of the guys running the U.S. and generally the global financial system. They seem to think they're bulletproof, and they're really not.
All right. Well, John Rubino, it will be very interesting to continue to track this with you. Before we let you go, did you want to share with the viewers, if they are interested in learning more, where they should go?
Well, yeah, I'm the founder of dollarcollapse.com. And even though I'm not running it, it's still a great website for getting up to speed on the things we talked about. So go there, put your name in the join our mailing list box, and the new management will send you everything that they put out for free going forward.
Fantastic. Any last thoughts before we let you go?
Well, be extra careful right now. I think we're looking at an extremely volatile couple of years, when a lot of people who think they've made really good decisions are going to find out that they didn't. And don't be in that crowd. Get real assets like gold and silver, and other things like oil wells, energy stocks, things like that, and you'll be able